Hello, Warriors. How's everyone doing today? Who's in the house? Hi, Kman, Ryan, James Groom, your new name. Welcome.
Morning.
So,
Morning, everybody.
hey, how are you, Kman?
Yeah, all good, man. Thank you very much. Hope you too.
Yeah, I think I'm fighting a little cold here. So, here's Euro. I believe it's 61.8 back right here.
Right there.
Uh, at 61, I think. So, I can't read
Ooh,
it.
Yeah,
What do
I'm
it's
you
going to
fine.
think?
argue 59.6 for me, Dale. So we're going to argue over a half a pip.
Okay. So, plus, it's EG is under a little bit of pressure. Man, it's really been playing up in this area for a while. Do you think that maybe we're getting a rollover here in EG?
I I think the market is like okay, has been buying sterling, and then with it's usually something to do with the speed as well. There's less liquidity globally in a pair like the cable compared to euro dollar. So when the dollar goes weaker, usually sterling outperforms a little bit. But I reckon the market is waiting um, for an event which may be a non-event, tomorrow's autumn statement by Hunt, but perhaps correcting a bit the euro sterling and then going into the tomorrow with a neutral stance and then pick a new direction. All of that is possible right here. Bit of a target zone as well on the cable, around 125.5 that I mentioned already yesterday. So
Yeah,
um, uh, yeah, I mean, we're trying to figure out what's next. The dollar is still quite under pressure, right?
yeah.
We don't see much retracement at all in any of the pairs. Never say never, of course, but it seems like the market is not giving up on what they are trading right now as of yet.
Okay. Um, with the dollar weakness, don't you think Canada's been holding up okay?
Very, very well. Canada is weak across the board on a lot of process, not in the least Canada yen, of course. But yeah, it's been a bit weaker of late. We've got CPI out in half an hour. That could change up a few things. There's decent support there. I've got it around 136, call it half three quarters or so in the dollar cat. That's going to be an important support. See whether it holds or not. And then if it's this CPI is weaker, we likely get a bit of a spike in dollar cat, but perhaps not for that long. But Canada should stay weak on the process side then.
Yeah. And gold challenging these highs because the yen is still under even more pressure than the dollar. What do you do here?
Here, I'm not doing anything. I'm just waiting. We just did that spike low and a prior high there in the low 147s, but I just don't know what to do with it. I mean, I'm not in the mood of chasing these moves. Um, but yeah, I'm going to be very interested though if we get anywhere close to 146, then I really need to figure out what's going on with it. Because there's a lot going on in just 145.80, 146.30 zone. That's going to be a very important zone for me.
And silver looked like we were going to get a correction yesterday, fighting its way back inside day. Did you do anything at
No,
320?
no.
Okay.
No, I didn't. I missed it. But I missed it on the other hand. As I said, I mean, if I'm actually looking for perhaps a bit of a retracement in the dollar, which is not coming at all right now. So I was trying to be patient and
Yeah, me
to see
too.
if I can reload some of it lower in silver. But yeah, looking at gold and all the rest, really. I mean, look at those commodity currencies; they are a bit like hell.
Okay, so here we are approaching a 200-day moving average on Aussie when most of the other ones are above it, right?
Yeah.
above it, right
Yeah,
there.
that's a zone here, just below 66. It's I had it spoke about it on the flow show as well this morning. 66, 82, 82, 83 is the 65, 82, 83 is also 50% of the July October decline in the Aussie. So we are on some levels here. Yeah, I mean we are on some levels on a lot of dollar pairs actually.
And it went right to your number. I think you were talking 45, 45 or so in the S&Ps.
Yeah, up around here. Um, but if you look at that price action, and is it worth going against it? That's the big question I have, especially looking at the dollar everywhere.
Yeah. Okay. Yields, you know, sitting here at 441 on the 10-year. Doesn't look as bad as the dollar. It's trying to turn. There's no news. Well, we have Fed minutes today, right?
Yes, we do.
Okay. So maybe there's some guidance there. Maybe something will happen. I mean, people have discounted. I think they priced in quite a bit of easing for next year.
Yeah, they're really pricing in quite a bit of easing. The thing is, it's the long end which is coming off. The 30s have come off more. The 20s yesterday after the
good auction.
After the auction, the good auction. Yeah, it was 1 BP through, even with a when issued a couple of BPs below the market. People are attributing it to the fact that perhaps some of those who had this glitch on the 30-year the other day went to market went to auction on the 20-year. But it's all the 10s are hanging around here, but market is really trading as if we are going to go for another leg, or at least hang around here with very little rebound. We need to see those yields rebound for the dollar to have a chance.
Yes, okay. Basically the yuan is at its 200-day. So
yeah, and it just completed a range extension too. That was if you look at that big range that we were in, Dale, it just basically completed it today. Right, like today. Yeah.
So you mean this range from here to here? Okay.
Yep, exactly.
Right.
You just do a simple extension. It hit the 200 DMA and it finished the extension. Just like a lot of these FX pairs have hit some pretty key levels today. So
okay.
Yeah.
So Blake, hard to come up with excuse me, much more to talk about. Nvidia did make
a new
highs.
Yep.
Yeah.
A new high ahead of earnings, right?
Yeah. Yeah.
Today's going to be a big day, I think. It's do or die for Nvidia. Probably going to have a lot of influence on how stocks react going into the remainder of the week. Because if Nvidia breaks out like it is breaking out right now, and earnings are solid, you're going to see risk appetite continue on. No one's going to stand in the way because it is it's a holiday week. You got everybody trying to enjoy the Thanksgiving holiday here in the US, and everybody else knows that the liquidity is going to be pretty thin. So why stand in the way of the markets, going into Wednesday, Thursday, Friday, even as, US equities will be closed, global markets will be open, but liquidity will still be poor. No one wants to stand in the way in that situation. Flip side is, if the earnings come in, less than worse than expected, the market doesn't like what they hear. You got a false breakout above those highs. You get a big reversal in Nvidia, and you might get some profit takers going into the remainder of the week. So I think this is a very, very pivotal tonight. This afternoon is going to be a very pivotal day for the markets.
Yeah, because there's no one short anymore, right? I mean,
no, I wouldn't
over
think
the
so.
highs. Yeah.
I mean, anybody who was trying to get short ahead of the earnings this week and maybe sold yesterday, you know, they're probably stopped out, I would assume. So yeah.
What's your take on gold and silver, Blake?
Well, I'm glad you asked, Dale. Here, I'll go ahead and take over real quick. And I know you're not feeling well. And I'm going to come back to yields. I want to go back to the yen because I do think that the 10 years, you know, right at resistance. And let's go over to you know, you were asking about gold and silver, and let me go pull gold up really quick. And so gold, I think, is in a triangle, and you'll notice how yesterday we reversed from triangle resistance. We came off and we bounced back basically to challenge those highs. And 1995 is resistance, and if we can break it, then you know we're off to the 2010, then quite possibly to challenge those you know, triple tops. The bigger fear I have right now about, you know, gold, silver. I know the dollar's gone really far, so it's like, you know, you look at the dollar index as a whole. You know, the dollar index just today. Here, let's pull this up real quick. Okay, you see the dollar index, you know, today is, you know, dropping towards the support. We've obviously had a really big move, and it's like if you're buying gold or you're buying silver, you have to anticipate or expect that the dollar is really going to, you know, continue lower at this point. And when you have, we have the VIX DSI was at 9 overnight. So, you know, you're getting, markets are a little too complacent at this point. It's hard to, you know, start selling dollars, you know, freshly.
Yeah.
You know, here. Yeah, exactly. And so, you know, that's the question you have with, let me go over to gold. So you got gold, you know, right up against resistance. The other issue that I have with gold right now is silver is struggling to get higher as well. Now, silver is in a long-term triangle consolidation. You know, if you zoom this out for, you know, we're talking, you know, a couple years worth of data. We have a symmetrical triangle with the 618 retracement stalling silver and giving us false breakouts from last week. So, you know, I even though I don't think gold and silver have a, you know, a perfect correlation, it is kind of like your safety net or maybe your comfort blanket when you're buying precious metals or selling precious metals. You kind of want the other one going with you in the same direction. So if gold is, you think gold is bullish and you're trying to buy gold and silver is struggling to break out, it's going to make gold's life a little bit more difficult, I think. So, you know, I don't know if I'd want to necessarily go there just yet. And then plus we've got to see, you know, the meeting minutes. As everybody knows, the meeting minutes are from a couple of weeks ago. So don't confuse today's FOMC meeting minutes with an FOMC meeting. I know there's a lot of new traders that do that. It is the meeting minutes, so we're gonna get the transcripts basically, or the commentary from the FOMC meeting minutes or FOMC meeting a couple of weeks ago, and we've heard so many Fed members talk between now and then, and you know, even though they're probably going to read a little hawkish, we've kind of heard otherwise. So don't get too tied up into what the meeting minutes say today. But I think the big catalyst is going to be Nvidia. Now I want to go back really quick. I want to talk a little bit about, you know, the bond market. You got, you know, you as you guys pointed out, you and Kman were talking, you know, you had the, a decent bond auction yesterday. You could see, you know, bonds and notes, you know, just kind of just holding gains. But look at this 618 retracement neckline of this inverted head and shoulder pattern. If you really want to sell dollars and you really want to be bearish the dollar right now, you really need to see this 10-year breakout, because if the 10-year breaks out, then, you know, bonds, or, you know, notes in this case, are breaking higher, yields are coming down. If yields are coming down, the dollar is probably going to be responsive to that. But we're also at previous support from way back here in October of 2022. So you know, you're really nudged up against some key resistance here. The flip side to that also, and I want to mention, because you guys were talking a little bit about the yen, I just closed out my dollar yen short from, you know, basically the 150 level. I closed that out last night. We hit 161% extension. We are testing this spike low from that was the rate check, right? Wasn't it right, Ryan? Rate check area?
Whatever it was, the submarines,
whatever you know, it was right there.
Like. Insert answer
yeah,
here.
so we tested that area, hit that support, 161% extension, very oversold. You know, and you see where bonds are at, you know, and you see where the notes are at, and it's like I don't know if I really want to chase the dollar much lower at this point. Like Kman, you were saying earlier, it's like it's tricky right here, right? So
yeah,
anyway,
it is. Yeah, especially with a week like this week, with Thanksgiving week. But it just feels like we may see this acceleration coming through some levels, and then perhaps think about where we are again. Yeah, the market is very negative dollars right now, and especially if you look at, as I said, to those commodity currencies, how easy they are catching up with all the rest. Yeah, and I also think, you know, the model funds are getting triggers. That's why we see all those so shallow retracements right now, because every hour or every couple of hours they probably have a shopping list of dollars to sell right now, because they are changing completely the positions in my opinion, or at least reducing a lot of the dollar loans.
Yeah, right, exactly. So anyway, really interesting area that we're at in the markets. Let's go to the dollar CAD, because I think the dollar CAD, first of all, is holding up much better than a lot of these other dollar pairs. I think the dollar CAD is pretty well behaved as far as technically goes. You can see that we have a symmetrical triangle that we're forming. Dips are being bought, and it you know, with crude oil, I guess, weak, it kind of makes sense, I guess. You can see the 50 DMAs offered a lot of support here. You know, and I got a question, you know, from Bubble Boy in our chat room, had asked about the about, you know, Canadian. Do you you know, sell
Bubble
the
Boy?
Well, yeah, he's not the Bubble Boy, if you know the
Yeah, the movie
dipshit from Twitter, not that guy. The guy that's a the guy that the doomsday guy that has been writing about doomsday since, like, you know, the last 10 years, has missed you know, that much of a rally. Yeah, that guy, not that guy. No, different Bubble Boy in our chat room. Anyway, he was asking about, like, should we, you know, buy the rumor, sell the news? I would say that you just be respectful of these ranges here. I mean, if you look at you know, the dollar CAD, I think support's going to be this trend line, which comes in around 136.80. Resistance right here is going to be about 137.80, and we happen to be right in the middle of this whole range, which doesn't surprise me ahead of, you know, key inflation data. So I think you have to trade the ranges. So to answer Bubble Boy's question again in the ForexAnalytix chat room, to answer his question, and is it a buy the rumor, sell the news? I think so, because if you put yourself right in the middle of the range and you get a spike up because of weak, let's say it's, you know, weak Canadian data, weak inflation, spikes us up here. Well, there's plenty of dollar sellers waiting in the wind, so you probably just sell it up there. And if it's a strong Canadian, you know, data, and the dollar CAD, you know, slips towards this trend line, well, you also know it's slipping towards the 50 DMA and triangle support, which, you know, is pretty key support. So why not, you know, pick it up on the long side down here at 137.80? So, you know, I think 30-40 pips on either side of the market is probably going to give you a decent area to look at. But those are my thoughts going into Canadian CPI. Ryan, what do you think? We got Canadian CPI coming up. Do you have any thoughts or feelings on this? Or are you just going to trade the levels? You think that, you know, Canadian inflation is going to be hot for whatever reason? What do you think?
Yeah, no, exactly as you described it. I think you've got to look when you come in right now. When you come into data, look at what the market is doing at that particular point. Right now, the dollar is still getting hit on rallies. So for now, I don't think that changes. So the the path of least resistance, or the better trade setup, is a much weaker than expected number that jolts dollar CAD higher, because that's the market getting further confirmation that the BOC are on pause or whatever. If it knee jerks it to your trading levels, you trade them, or you lean against them. You don't have to go with a massive stop loss. And if that's as far as the market wants to push it, and then the rally sellers come in to hit the dollar, then you're going to make some money. The other side's a bit more difficult, because it's pushing with the wind. So if it is a strong number, it will be a bit of a shock. Whether that's the kicker dollar CAD needs to move it out of this tightness it's been sitting in is another question. So I'll be a bit more cautious on a hot number, fading that one, than I would be on a softer number.
All right. It looks like Kman was just addressing Bubble Boy in the chat room. So Kman, what are your thoughts here in the dollar CAD?
Yeah, on the Canadian, so if it's a weak number, I think the Canadian dollar will continue to be weak on the process side, as we've seen of late. And yeah, I think around that 137.75, there's probably going to be offers in the dollar on the dollar side. But yeah, it's a bit same as Ryan. If it's a sticky or stronger number, I do think the Canadian dollar may have some catch up to do on the rest of the dollars, and then I suspect this 136.45.65 to come under real pressure on the dollar CAD.
So that'd be right here. And just so you guys know, we're seeing a little bit of dollar weakness. Sterling's trading at new highs right now. Gold is at 1995, just as we were talking about it just a bit ago. I mean, we are really challenging resistance here, which if broken, we're going to be, next thing you know, we're going to be trading up at 2010, and not the year of 2010. We're going to be trading up at these levels. So anyway, that's just kind of what we're seeing here. Let me see. Saab says, if we get hot CPI in Canada, would that not strengthen the DXY due to proximity? No. I don't think so. No. I don't think so.
No, it's a different market.
It completely, and different inputs.
The opposite may be true, because some of the Canadian weakness may be due to the US proximity, but Canada is really a driver of the US dollar, right?
Yeah, so there you go. I wouldn't trade into that thesis at all. Matter of fact. So hey, we got a few minutes before we set up for this Canadian data. I do want to just because I want to mention the S&P here. We have the S&P right up against the 88% retracement. Now, this is just so you guys can see, a lot of horizontal resistance. Just above that is what I think is long-term symmetrical triangle resistance, which comes in around 4,600. Very, very big resistance levels that could really be probed, following Nvidia. Everybody's, all eyes are on Nvidia right now. And if those earnings aren't bad, we could very easily be, trading around 4,600 in the S&P come the end of the week. So just keep that in mind. I know stocks have gone really far, but that, just because they've gone really far doesn't mean they can't go farther. So just, a little bit of heads up with that. And speaking of which, just to get a look of Nvidia before we, talk to the everybody else on, where you're seeing everything. But notice that the, Nvidia is at resistance. We closed at new all-time highs yesterday. Pre-market's down just a couple of bucks, but that doesn't really matter. It's going to be where we trade after 4:30 today Eastern. I think that's where the market's going to be really looking. So Ryan, as we head into Tuesday in this shortened holiday week, what's hot on your radar right now?
What's hot, seeing if this dollar rally continues or whether it's going to run into a bit of trouble. I'm watching euro dollar carefully up at these highs, 109.60, 65, because I'm getting the impression we might be running into a little bit of more of a brick wall than we've seen of the last few days. But if it goes through there, then we're off to the races. Probably 110 next for that one, and 147 is my number. in dollar yen. That was my number on the way up before we got the spike down. The fact that we broke that low this morning is probably significant, because if it held that low exactly, that spike low, that tells you something. But the fact that we broke it suggests that there's still a lot of selling pressure there. So 147 is the big number, goes all the way back into the 1990s if you want to look that far back. Yeah, it was a level when we were in October 2022, when we came up to these levels before, and it's probably going to be a level on the way down. We shall see.
All right. So we'll pay attention at the 147 level in the dollar yen, and also great long on the euro dollar. Really good stuff.
Yes, mate.
Yeah,
Kman, I'm sorry.
Yeah, Ryan, you trade very well with COVID.
He does, doesn't he?
I should be on more often.
All right, Kman, we got a couple minutes. What's hot on your radar right now?
Well, yeah, all those levels in the dollars. I'm slightly different on the dollar yen. For me, the real big zone is 145.80, 30. I think the 147 is a little bit too old, Ryan. Come on, I mean, you're showing your age. Go with the modern times, you know.
Everything on a 5-minute chart.
Huh?
Everything on a 5-minute chart, eh?
No, you know, I never look at 5-minute charts. No, I think this prior low there, this scale low where we stopped, yeah, it's good for the statisticians also. But I really, okay, it's a marker. It's a low today. It's been a high in the past as well. Okay, it's a decent marker. But still, I think that there's much more important levels a bit lower than here. Top side 148.5. Now to watch on the dollar yen. If we get a retest and cap there, that means the move is still very much ongoing. I'd love to see a retest actually to know what's going on up there. And then I am, as I said, I'm keeping it really moderate in size, counter trading this euro dollar a bit. And there's another one where I picked up just a little bit to see if these low 88s are holding in the dollar Swiss. But for the rest, I have very, very little running. As I said, I'm waiting for lower levels on silver or a break above 24, 10, 20 or so.
All right. You know, a couple things I failed to mention, so I'm going to mention them right now. US dollar CNH. I know Dale, you were talking about, I just want to show you that range extension. This is the 200 DMA. There's the range extension. We posted this in the ForexAnalytix chat room just so everybody kind of knows where we're at on that. Also, the US dollar Swedish krona, I've been waiting for this double top to complete. It did complete today. And it hit the 78% retracement. I'm going to see the reaction from here, especially if the euro has a difficult time at the 109.60 level today. So we'll see if we can get some sort of bounce out of here. Look at how oversold the US dollar Swedish krona is here too. So anyway, just some food for thought. I'm going to put up the dollar CAD right now, and as we head into Canadian CPI, what I'm also going to do really quick is I'm going to grab the data flash from ForexAnalytix, so we have the data fresh as it comes out. We have about 40 seconds, so let me move that out of the way. Put on the live squawk feed here. Making progress on hostages. Netanyahu said, just a little heads up. Okay, so here, let's put that like that. And the EuroCAD is also very important, I think, as Kman pointed out earlier. We're at some 127% extension on the EuroCAD. It's been a hell of a rally. So seeing where it'll go from here is going to be really interesting. Remember, support, in my opinion, is going to be around 136.80. Resistance 137.80. We're smack dab in the middle, maybe a little lower than midpoint. So let's see this Canadian data. Now, also remember, we have some housing data coming out a little bit later too.
A little
much in line.
Weaker year over the year CPI.
Pretty much in line on the headline CPI number. Some of the trim core measures.
The core is
one's
a little
bit
higher,
soft,
a little hotter.
one's
Yeah.
as expected. Yeah, it's lower inflation. It's confirmed the lower inflation.
That month over month core CPI, that 0.3% is probably what drove us, spiked us down here. But remember, there is a lot of support down here. I don't know if I would be trying to chase it on the short side here. A little hot. So pick it up maybe at 136.80 if you see it. Kman, any final thoughts here?
No, I'm neutral on this number. I don't know what to do with the Canadian dollar on such a number.
Okay. All right. Well, that's going to leave us neutral probably for the day. And Dale, I know you have an interview here. I hope you feel better, Dale, because you sound a little raspy. I hope you feel better, especially heading into the Thanksgiving holiday, so you can enjoy some of that tryptophan and turkey. I mean,
yeah. Blake, can you help me promote Jamie? It looks like he came in a different way. There's nothing on the right side of his name to promote him. Jamie, did you call in? If you could hear me.
Oh, there he is. Oops, wrong.
Can you promote him?
I should be. Yes, I can.
Is there a new format? I see chat now.
No, I see the 3 dots. So I brought him over. Let's see if he comes over. There he is.
I see him. Okay.
All right. Hey, you guys, make sure you stick around with Dale and Jamie, because he's one of my favorite reporters at Reuters. So yeah, guys, stick around.
Team. Thank you, team.
Thanks, Coach.
Thank you, K-Man. Nice trading, Ryan.
Cheers, mate.
Great insights like always, Blake. When experience matters, at pips are. That's my expression. So, thanks, Jamie, welcome back to F.A.C.E. How are you? Waiting to hear you.
And as he's unmuting, Jamie, I hope you have a wonderful Thanksgiving with the holiday, or with the family. So,
thank you very much, Dale. Thank you, Blake. Thank you, and Dale. Good morning. Good morning, everyone. Can you hear me?
Good morning,
okay?
Jamie. How are you? How are you today, Jamie?
Good. I'm well, thanks. Looking forward to that turkey on Thursday.
Okay, so you expecting anything shocking in the Fed minutes being released today?
No, not to be honest. No. I think I think the month of October was obviously a fascinating one. We had I was kind of tracking the Fed speak in October, and I think I'm right in saying all, or if almost every single Fed speaker in that month mentioned financial conditions, either directly in their public comments, or they alluded to them very very strongly. And of course, in October, that's when the yields were rising, conditions were tightening, stocks were falling, etc., etc. I'm just be curious to see how much that played into the minutes, into the discussion. The tightening then in financial conditions. Of course, we've had the reverse since then, and everything is kind of coming back. You don't need me to tell you that the 10 years now well below, it's below 450. Back then it was hitting 5%. In fact, the entire yield curve was almost, from a month out to 30 years, was almost above 5%. So it'd be interesting to see how they viewed that, how they viewed those developments then and compared to where we are now. And I think it'll be interesting to see also the public commentary in the days and weeks ahead, going into the next meeting and into year end, how they view financial conditions, which have come off quite a bit. So again, I think when we last spoke, we were talking about financial conditions a lot, and I think we will be again going forward.
Wasn't it the BOJ that was really the catalyst for financial conditions to ease when we came up with a huge fiscal package?
Yes, that's right. That was a factor. Of course, it's funny that you should mention financial conditions and Japan. I've just had a look in the last couple of days. And I'm not sure how much you guys look at the Goldman Sachs Financial Conditions Index data. I know there are several measures of financial conditions indices out there. But one I look at because it changes on a daily basis, so it's fairly update in real time as opposed to some of the others. The Japanese Financial Conditions Index, again, this is only one bank's data, but it's the loosest. Last week, that index fell to its lowest in, I think, 34 years since, yes, it was February 1990, so almost 34 years. So Japan.
That was the end of the bull market, right? 1989 was the end of the Japan miracle.
Exchange rate basis, the lowest since the 1970s, the early 70s. The Nikkei is about to break out into new highs. So when we're talking about financial conditions and Japan, these guys, as always, it seems, are on another level.
Okay, so here's the Nikkei that Jamie's talking about. Yeah, we are at new highs. Not confirming these highs. I'd be careful
can you hear
with
me,
this.
Guys? I think my audio has dropped.
I hear you. I hear you, Jamie. Can you hear me? Jamie, I could hear you. We lost Jamie. I'll give it a minute or two, see if he comes back.
Hello, I think my audio has dropped.
You're good. I could hear you. I could hear you, Jamie. You can't hear me. Jamie? Jamie can't hear me. Okay. All right. Can you guys hear me on the webinar just to make sure it's not my own? Rick, all you guys? Yes? Okay. So Jamie will have to reschedule. Thank you, guys. Okay, he's going to try and log in again. It's gone. Okay, I can't bring him over. And I don't think any of my compadres are here. Are you with us, Steve? Blake? Okay. All right, that's a wrap, everyone. It's disappointing. I'll get Jamie back soon. So have a good day, everyone. And you could join the team in about, I don't know, 20, 35 minutes. Okay. All right, I'm going to wrap it. Take it easy, everyone. Okay. Jamie, if you can hear me, we'll have to reschedule.